Le webinaire va bientôt commencer. Veuillez rester en ligne. Le webinaire va bientôt commencer. Veuillez rester en ligne. Le webinaire va bientôt commencer. Veuillez rester en ligne. Le webinaire va bientôt commencer. Veuillez rester en ligne. Le webinaire va bientôt commencer. Veuillez rester en ligne. La diffusion vient de démarrer. Tous les participants sont en mode écoute seul.
I'm just making sure you can hear me. Let me know if you can hear me, please. Anybody? A couple of you type in, yes, I can hear you. Okay, good, good, good. All right, we got about 5 minutes. Let's let people get here. We have a lot of people signed up. And we'll get started. So Bando, you said hello, so I'm saying hello back to you. Patrick, awesome to see you. I hope you're doing well. You feeling good? It's nice to see you. And I'm very happy to see that most of the names of the people that are here so far, I do not know. So that's good. I don't want to know you today because I want you to learn about who we are. That's what we're doing. We're just teaching about what we do. And we'll get started in 4 minutes. So I'm going to mute myself and then we'll get started in a couple of minutes. Okay, folks, I want to get started. So I want to welcome everybody to the webinar. I want to thank everybody for coming. And Patrick, I hope everything goes just as well as possible for you. You know that I really mean that. I miss you in the trade room. I want to welcome everybody to All About ABT, Appointment-Based Trading. My name is Leigh Goldstein. I'm the trading director at 10-Minute Trades. That's me. Let me show you the real me, okay, and then we'll get started. I think it's, while I'm showing you the real me, how about everybody just type in, where are you from? Let me know where you're from. Let me see if my webinar is working. Oh, my camera. You know what? It says it should be working, but I'm not seeing my picture, so let me do it a different way. With GoToWebinar is a little bit scary because sometimes the camera stays on even when I don't expect it. Let me know, can you see my face right now? A real human being or not? Can you see a real human being? Because I want to make sure you can't. All right, let me use my recording software to show you. I hope you can. You can see me? Okay, good. That's just a picture. Okay, so this is me. All right, I'm a real person, a real living person, alive, a regular person, a happy person. Okay, I just want to say hello to everybody. Thank you for being here. And the reason I want to show you my face is because a lot of times you come to these webinars and I'm a real person. Okay, I mean, I'm just like everybody else in this room. And I started out just like everybody else in this room. You know, most of us started out as beginners, okay? And I was a beginner at one time. And a lot of people are here today because they want to learn about appointment-based trading. And that's what we're doing. That's what we do. And basically, to explain exactly what that means, very simply, we make an appointment with the market and we show up in our trade room and we make a trade and then we leave. Okay, we hang around for a little bit, we talk about the trade, we show some videos, and that's what we do. We don't sit in front of our computer all day long watching and waiting for trade setups to occur. So we're very different from most of the other companies. And I'm assuming that the reason many of you are here is because a lot of you have found us on Facebook, or you found when we were streaming on Facebook. We're now streaming on YouTube. I know a lot of people have found us on YouTube, and I believe that a lot of you just don't know trading yet, or you do trading but not our style, and you know, you just want to learn something about what we do. And that's what I'm here to do today. No selling, no, absolutely no asking for one penny, just total education. Any questions that you have, feel free to ask, and I will answer them during the conversation we're having here. You don't have to wait till the end of the webinar. And I'm just looking at where everybody's from. It always fascinates me. We've got people from Atlanta, we got people from Connecticut, San Antonio. So type in where you're from. Not enough of you are telling me where you're from. All right, Brian, Ireland. I love the fact that you're from Ireland. I love Irish TV. They have a lot of great shows. Denver for Barry, that's great. Okay, good. So all over the country, all over the world. Quebec, we have a lot of Canadian friends that follow us. That's awesome. And I'm betting there's a few people from other countries as well. So good. I just want to welcome everybody. So appointment-based trading, I want to tell you up front, I don't have a PowerPoint presentation. I'm not going to bore you to death. I'm just going to go over what we do every day. That's what the goal is here. So we make an appointment with the market. Everything that we do stems from something that we give everybody for free, okay? Every week, we start the week with the WMM. we call it, the weekly market mover. And we give it away for free, okay? And you can use this report whether you are and want to be a news trader or an event trader or make an appointment with the market. This report that we give you for free is very important because not only does it show you events that you can trade, but the most important thing that I feel about this report is that it will keep you safe as a trader. So let's say you're a regular discretionary trader and you don't even do what we do. That's perfectly fine. You could still get this free report and keep yourself safe. Why would it keep you safe? Well, let's assume you're a grain trader. Yesterday you were trading at 11:30, 11:25. You decided to take a grain trade. For whatever reason, you were trading corn or soybeans and you didn't know that there was a report called the WASDE report coming out, okay? And all of a sudden you're in a grain trade and you're stopped out of the trade in a shocking move that costs you hundreds of dollars and you don't know why. Well, the reason why is because if you look at our weekly market mover, our weekly free report, you can see that at 11:30 in the morning Eastern time yesterday, there was a WASDE report. This schedule, this report is a view of many of the important events that we feel are going to move the futures markets in the upcoming week. So that presents an important issue. Number one, we trade futures. Number two, we use the Ninja Trader platform, and that's how we trade. You could use TradeStation, Trade-Evate, TradeView, Thinkorswim. You can be trading on anything, and our weekly free report still keeps you safe because it tells you, hey, if you're going to be in the market trading crude oil at 10:30 on a Wednesday, you better know that there's a crude oil inventory report coming out at 10:30. And let me show you why you better know. Look at the way it moved. This Wednesday, if you were in a crude oil report, just give me 1 second because it was mind-boggling. So what date was Wednesday? Wednesday was the 9th, wasn't it? Yep. Give me a second. I meant to actually pull this report out. It's the one video I didn't pull out. But what happened? So what happens on these reports is they're essentially news. And on Wednesday, that particular news report is, well, how much oil is in storage in the US? Okay. And what happened was there was 15 million barrels extra of storage than they expected. So here's oil on the left, okay, a 1 minute chart of oil. And you could be looking at the oil futures with any platform, it doesn't matter, okay? And here's how oil moved. When, let's say you're in an oil trade, right? And you're humming along, you're trading oil, happy as a clam. You're long oil, you bought oil, you're figuring it's going to test the high of the day. You're up $100. You don't know about the oil report. And 10:30 rolls along, and all of a sudden, you've lost every penny that you had in your trade, plus about $900 more, okay? When this move was over, I think if I remember correctly, oil moved like almost 100 ticks. That's $1,000, okay? If you don't know about these reports, then you're not doing yourself a favor because you're going to damage your trading account, right? If you know about the reports, don't be trading oil at 10:30 on a Wednesday because every Wednesday there's a possibility oil could throw you out of your trade. So that's what we do. What we do is the opposite of that. we make an appointment with the market and we start at 10 o'clock and we start looking at the market and we have a trade that we set up and we plan in some way, shape, or form to trade oil. And that's what we do. And we call that appointment-based trading. So we have all these events that we have appointments for, and not all of them are tradable events. When an event says watch, it means that's a report that we would never trade right now. We would just watch it, see how it behaves. And then you can read this report by looking at the index. We show you what index we think will move on this report. 6C is the Canadian dollar, 6A is the Australian dollar, GC is gold. So there are these are called futures, and the futures markets are very volatile based on news reports that come out. So when we say we're making an appointment with the market, we're using a schedule that we create every week. It's different. And then we get together with our members and we have trades that we trade on these reports. But every trader that's in the market should arm themselves with knowledge. The key is if you don't have the knowledge to do things properly, you're going to lose money because the market wants to take your money. The brokers want to take your money. Nobody wants to help you get money except you. Okay? The educators want your money. Everybody. You got to protect yourself with knowledge. Okay? So, important. You can get this report for free. All you do is go to our website, and this is the only thing I'm selling you, and I'm selling it for free. Go to our website and www.10minutetrades.com. Sign up for the report, and you can either get it off of our website every week or we email it, okay? www.10minutetrades.com, and get that report so that you could keep yourself armed with knowledge about what to be careful about when you're trading, all right? And you can use this report. Let's say you're like me, right? I showed you the picture of me because I'm a regular person. I started out getting involved in this because I just was so interested in news. I was sitting in front of my computer all day long. I was in other company trade rooms, some of which I'm sure you all know. I personally was taught to trade by John Carter and Hubert Centers back in the day when they were together. But I went to everybody's trade room, you name it, and I was there, jumping around from room to room. But I always found I loved the news, I loved events, and I loved explosive, quick trades. So this report, if you're a person that likes the style of trading that we do, this report helps you to see which events are possibly going to move dramatically during the week. And it also shows you the instruments that you might want to trade. It also lets you come into our trade room for free. If you see this little YouTube logo, that means we're streaming our trade room on YouTube and you can watch it on YouTube. Okay? So I can't say more. I can't say, how much I love our weekly report. I just think it's valuable, useful, and just a fantastic tool that will keep you safe as a trader. So everybody should get it. It's free. Why would you not want it? Okay. So our promise here today was to talk about appointment-based trading. You don't see the report on the website. Sign up for the video, John. It's a free video. It just explains what I'm explaining right now, and then it will send you the report. Okay, so that's how you do it. Just sign up for the video, just type in your email, and that's it. Okay. So there were a lot of categories, a lot of issues that I wanted to go over for you about appointment-based trading. okay? So everybody understands the concept. We make an appointment and we come to the market and we trade the market when we want to, okay? So why do these events move the market? So let me explain why they move the market, and the best way to understand how and why they move the market, and also how to find these trades, is to start to learn and use the calendars that also are available for free, okay? So today is freebie day, all right? It's a way to get some free tools to really help you, even if you're not a news trader or an appointment-based trader. This knowledge is for all traders, in my opinion. So the first thing that we do is, how do I create that report? I'm hooked on calendars. Investing.com is one calendar that we look at every week. So when you go to their website, investing.com, it looks like this. Let me close down this. Investing.com, and then you go to news, economic calendar, and then you just scroll down and you can get rid of the ads. You can get a little pop-up. You just click it. It's free, like I said. And all these listings here, I click on, let's click on next week because I haven't done the schedule yet. And they go through all the reports that they think are going to move the market. And investing.com shows the reports that they think are going to move the market by these little stars, okay? 3 stars means a lot of impact, 2 stars means less impact, and 1 star means very little impact. And most of the time, they're reasonably correct, okay? Sometimes they get it wrong. Natural gas, all the calendars have it wrong. Natural gas is dramatic. For some reason, the calendars, a lot of them don't say that, but it is a dramatic move. So I go through this calendar, and the reason, for instance, and let's translate a real event of last week let's go from the calendar to a real event to a real trade. So we start with the calendar. I take the calendar, I go through it with a fine-tooth comb, and I notice on the calendar, and I've been doing this for years, so you know, this is something that I practiced. You know, I do it all the time. And one of the big things I like, there's certain types of trades that are working really well now. I see next week is the FOMC statement, so that's awesome. But I want to look for last week's calendar, so that's this week, because I want to show you calendar to event to trade. So I looked at the calendar last Friday, and I noticed that there was a bond trade, okay? 2 bond trades. There was a 10-year and a 30-year, and it was on Thursday. That I know for a fact, and very interesting, notice 1 star. So sometimes you would want to get our free schedule so you know that this is an impactful report, even though investing.com doesn't think it is. We know it is. So I take that 30-year bond auction, I throw it on our weekly calendar. Here's the proof. It's on my weekly calendar, right? And I convert that into, all right, that bond trade. We know that a certain time of day, that bond auction is going to take place, and it's going to move the 30-year bonds, okay? So we go in our trade room, we put the order on, and I'll explain what's happening. At 13:01, 1:01 and 30 seconds Eastern time, okay? Let me just, someone's trying to contact me. I want to make sure that there's, okay, never mind. At 13:01:30, 1:01:30, our orders go on our chart because we know this bond auction is going to take place. And look at that move. It explodes up and it makes a bunch of money. If you were in a random bond trade and you were short, you would have lost a bunch of money. Okay. So why does an event like that oil trade I showed you, and it's easier for me to show you the oil trade than a bond trade because it's more obvious. Why do they move the markets? Why does an event trigger the market? So let me show you. You saw that crazy oil move. It was dramatic, okay? And it moved that way because what happened was on the calendar, okay, that we're going to look at, on that calendar, the news came out. And that news had an expectation of how much oil there was going to be in storage, okay? And that created a news result, and it's monstrous. Crude oil inventories were 15 million barrels of oil expected in inventory, okay? There were 15 billion, not 15 million barrels extra, more than what they expected. So there was so much extra oil laying around, it caused that move in oil that I showed you. Oil burst down. So that's why we call that a trigger, a trade trigger. That's why events move markets. A news event is expected. It might be an interest rate decision. It might be a news conference that's taking place. Might be any of one of 100 different things. That news comes out, and then there's an explosion in price if the result of that event is very different from what was expected. In other words, if they were expecting 5 barrels of oil to be available in US storage and there were 500, then it would most probably cause oil to go down because there was a lot of extra oil around. If there was way less oil around, then it would cause the price to go up. Those events are called trade triggers. And that's how we find our trades. So there are, what if the move is very whippy and it stops out? Yeah, that happens, John. Yeah, I'm not really here to talk about the trading specifically, but yes, you can. John is saying, what happens if the move is very whippy and stops you out and then goes your way? Then most probably for us, we lose the trade, John, because we have a specific way that we trade. But we also are looking to take more and more reversals these days as well. So sometimes you can have an initial trade that doesn't work out, and you could have a trade that reverses. And you know what? I was testing a trade this week because it speaks specifically to the exact thing that you're asking me. On Thursday, there was a news report, a very popular one, called the ECB refi rate, okay? And that's like the ECB, the European Central Bank, it's their FOMC rate statement. And I happened to record it because we were going to trade it, but I didn't, and it's okay. So to answer your question, it's exactly what you're saying. I was trading it a specific way. I have orders that we put on our chart, right? So if the price explodes up, it fills me to the upside or long. If the price explodes down, it filled me to the short side. In this particular case, John, it happened to work. It didn't whip. But to answer your question somewhat, I noticed that there was an indicator on the chart called the high of the day, a very common reversal point. And I had also set up to take a reversal at what I thought if it hit that spot, I would reverse. So I got it, my trade ended by itself because that's a lot of times what happens to us. And I put my reversal on and it also reversed in price. So I could have lost the first trade and then made some money back on the reversal. Okay. So that's in some ways a lot of what you're thinking about. What if it's whippy? What if it reverses? And that happened to be a perfect trade, John. The chart was perfect. Everything was absolutely perfect about it. And just looking at the gold chart, this happens to be the gold chart right now. I mean, there's no trade right now, but if there were a trade taking place right now that had impact, I would be looking to take a reversal of gold right here and or right here. And let me tell you why. Wow. You have the high of the day and a pivot, right? So if gold shot up to that area, it's far away from the current price. So there's a very good chance it will get tired by the time it gets there. And it's going to test the high of the day. And very often before it breaks a high, it tests it and pulls back. So very good chance for a reversal. Down here, you have this yellow line, which is a little bit hard to see, but it's where my arrow is. If I show you this yellowish line, that's the 6 p.m. open. Then we have something called the PP, which is like a central pivot. So this is all big support area. If price pulled down to here, I would want to buy this area because it's a lot of support. Here you have resistance, so you're selling. So you sell resistance, you buy support, okay? That's just basic, what do you call it? Just basic trading, one type of trading style. People trade, they sell resistance and they buy support. It's like just like socks. Your socks that you're wearing, they support you. They hold your feet up, right? I guess. But so that's what that to me is a great chart. I just happened to look at it just by fluke. So getting back to, I was just answering your question, John. What I was talking about were the calendars. So how do we find all these events? There's important calendars that we like the best. Investing.com, I've showed you, is very nice. Investing.com. One nice thing that I love about investing.com is if you are an actual event trader, at the time of the event, when their website's working perfectly, they will show you the result. So in other words, at 10:30, if you're looking at that oil trade, they show you the amount of oil that's in storage. So it's really nice. Or the JOLTS report, for instance, which is a jobs opening report. They show you the news result at the time that you're trading it. And that's a very nice feature of investing.com. A second trigger website that we love is Forex Factory. That's forexfactory.com. They have their own version of a calendar, and they do it a little bit differently. They do it with color, okay? The yellow color is lower impact, and if you hover over it, it tells you low impact expected. If you look at the next color, it's orange, medium impact, and then red is a high impact. And if you look at what's red, the Bank of Canada rate statement, and that's a good red. That's a good potential for a high impact move, okay? Because bank statements, markets love to move on bank statements, as long as you know what instrument to trade. So what are you going to trade? What do you think you would trade out there, folks? If you were an event trader and you wanted to trade the Bank of Canada futures, you're trading futures, what future do you think you would trade if you wanted to trade the Bank of Canada rate statement? So rather than me torture you, you would trade the Canadian dollar, right? Because we don't really have a bond, a Canadian bond that we would trade. With the US rate statement, we might trade bonds, you might trade gold, you might trade the NQ, because those are indexes that move very well on the US FOMC statement. On the European main refi rate that I just showed you, that reversal trade, we trade the 6E, the euro, because the euro moves very well on that report. So these reports, these calendars, create for us what we call trade triggers. And the triggers work because the news result that's expected is more often very different than what they forecast. So that creates a large move in an index that's prone to move on that particular news. Okay? That's the basic premise of appointment-based trading. So we spend an unbelievable amount of time studying the calendars, and there are many great calendars for Forex traders out there. I love Forex Street, FX Street, okay? So you go to fxstreet.com, and if I typed it in right, it says continue to cite. And I don't like to let anybody go to economic calendar and FX Street. Just so you know, FX Street is one of the few calendars that updates automatically too when the news comes out. At least they used to. I haven't looked at it like in the last month, but they update recently. So for instance, coming up this week, China's retail sales, I'm going to trade that. I think that might move, believe it or not, the copper market, okay? And I'm going to look for a trade. The British jobs report, they call it the GBP claimant count. That's the British jobs report. So like all the years that I've put in studying all these calendars, I've learned how to read them, and I take that knowledge and I do all the work for you, and I put it on our weekly schedule so that it can help keep you safe. And for our members that want to actually trade the way we trade, they will actually go further and come into our trade room and actually trade these reports with us, okay? But for the regular person, those calendars have, the regular retail trader, I should say, those calendars have tremendous, tremendous value. So what we do is we don't have to spend 500 hours worrying about, well, deep market technical analysis. I'm not looking for what Elliott thinks the wave is that's going to move the market. I don't have to draw Elliott's waves. Frankly, I don't even think Elliott knows how to read those waves. But I don't have to study Fibonacci. I don't have to study 800 different levels of what happened this week. I don't have to study anything more than, although some people will argue a little bit with me, I study the event itself. In other words, the most important thing to me is what did the report that we're trading do last, if it's a monthly report, what did it do last month? What did it do the month before? What did it do the month before that? So what we study and what appointment-based traders should be studying is the event. So in other words, last week we traded the US jobs report. So when we go into our trade room, we're not studying, for instance, I'm trading ZN on the jobs report, okay? ZN is the 15-year note, all right? And it's not cheap to trade. It's like $15 and change a tick. But I'm not looking at deep technical analysis on the chart because I know the US jobs report is going to explode the bonds market or the gold market or the ES. There's quite a few different markets you could trade with the US bond report. So what I'm studying is, well, what happened every month previously? In other words, this is November's bond trade on the US jobs market. And I'll go back and I'll study the event. Did it move a lot? Did it move a little? What can we expect? So we don't have to spend 8,000 hours going over deep market technicals, but instead, if people learn to set their charts up in the simple way that I set mine up, you can trade news events very, very easily. And if you'd like, I'd be happy to show you how I set my charts up. Most people out there, I assume, are trading. And one of the things we promised to do, because so many new people signed up for our service, we wanted to just show you things that you might not know. And one of the things you want to know how to do is we use NinjaTrader. It's just a trading platform like TradeStation or any other TradeStation. So if you create a new chart, and then choose, let's say we'll choose gold. Right now, the current market on gold that we're trading is February's chart. Okay, that's the current value, so to speak. And we trade minute charts. Okay, sometimes we'll trade second charts. We trade 1 minute charts. So when you create a chart, it creates a blank chart. It looks like this. I can pull it over here. Give me 1 second. So a new chart looks like this. It's got nothing on it except price. Okay. So it happens to have a trade that we took this morning on it also, but that's okay. The first thing I do is, see, it's very, very close to the margin. I go to properties, I right click the chart, and I move the margin. It says right side margin, and I make that 40, okay? And the way that I'm setting up my chart now applies to any platform you might be using. If you're using TradeStation, all of this relates. If you're using MetaTrader, all of this relates. Anything. So create a little bit of space for yourself on the right so you can not be so close to the margin so you don't have a problem seeing. You might want to make the candles a little bigger. Most platforms let you scroll down at the bottom by holding the mouse button. A lot of them will work that way. So you can make your candles a little bit bigger. You can do the same thing, hold down your mouse button on the left. Sometimes you might have to hold down the control button, and maybe it'll do something like that. But generally, make the candles so that you can see them well. Then what I put on the chart with NinjaTrader, you have indicators. If you right-click the chart with NinjaTrader, you have indicators, and they're free. They're included. And that main indicator that I like the best, my favorite indicator, is the current day open, high, low. That's the first indicator, so I double-click it, apply it, and okay it. And the current day open, high, low, you saw a couple of lines show up. They show up. Okay, and they show up in a different way depending upon, if you click data series, you'll notice trading hours. Okay, pivots, indicators can be time sensitive. So if you put an indicator on your chart using the 24/7 default setting, okay, which happens to be one of the popular settings, 24-hour trading, your indicators will appear at a different location than if you use them the way I use them. I use instrument settings in NinjaTrader because that calculates my pivots and my high and low of day from 6 p.m. the previous evening. Okay, think about it for a second. Why do I like 6 p.m. the previous? What happens 6 p.m. the previous evening in most markets? Who can tell me what happens 6 p.m. the previous evening. Well, what happens is most of the markets reopen for the next day. Okay, so like the mini S&P reopens, and they trade overnight. That's right, the futures open. Asia might be starting up, John is saying. And we call that, actually in the US, they call the overnight session the Globex market. There's a lot of different, because think of it this way, in Europe, our overnight session is their normal session. Brian in Ireland, I mean, he's not trading Globex when he's up in the morning. He's trading his regular markets. We're trading at a different time than he is. So, but I want my pivots. The point is, I want my high of day to start at 6 p.m. It's just, I think that that is the true start of the day. You could do it. You could set it up so they start at 9:30 when the U.S. markets theoretically open. Pivots work because a lot of people look at them, and there are a couple of different time periods that people look at. So more than one, there's not an absolutely correct way to do it. There are a couple of different ways that people do it. There's more than one daily pivot that actually works, which I know is a little hard to understand, but it's true. So I set my charts up. First thing I do is I put the high and low of the day on it using that indicator that I showed you. It's free. Everything I'm going to show you is available online for free. And you can always send me a personal email, help@10minutetrades.com, and I'll try to answer your question no matter what it's about, okay? It could be a Paul McCartney question, and I'd answer it. I'm a musician. I'm a musical trader. There are millions of musicians that trade. I don't know why, but there's a lot of us out here. So current day open, high, low, okay? The 6 p.m. open, the high of the day, the low of the day is a red line. They're really good points of support and resistance. They're good, especially for reversal trades after an event takes place. The next thing that I like to put on are pivots. And I just go to P for pivots. I double click it, and I just put on the Ninja Trader pivots to start, okay? And then I look at the chart always before I get to the room, and I look for key areas, especially for reversals. If I see two pivots hugging the same area, that's an area that I love, okay? That means there's a better chance. If there's 2 or 3 lines together, that means that that area is going to be harder to break through. So there's a better chance of a reversal there, okay? And those, believe it or not, I also then put my favorite indicator, some sort of a squeeze. And John Carter and Hubert Centers made the squeeze really popular. So I put a squeeze on. The key to know is the color coordination of the squeeze and the momentum length, okay? Those are the 2 important things that we are dealing with the squeeze. What's the squeeze look like? Now, Ninja Trader's got a weird, goofy thing it does when you first put the squeeze on. If you put a squeeze on Ninja Trader and it looks like that, turn off the auto scale or turn on the auto scale. In other words, look, I turned it off, it didn't do anything. Highlight the squeeze, right-click the properties, go back to the squeeze. Make sure you're on the squeeze. Okay, so I'll tell you what, right-click the chart, go to indicators, go down to your installed squeeze, and change the auto scale. If it's on, turn it off. If it's off, turn it on, and the auto scale will fix itself. And watch, the squeeze now looks normal. That's what the squeeze is supposed to look like. Essentially, the squeeze is a momentum indicator. We use it a little bit differently than the average person. The regular normal person uses the squeeze when it's going down Price often is going down with it. So it tells them, I might want to be in the market short if it's not a consolidating market, okay? If the market is, it's easier to see if you have it spread apart a little bit better than I did. This is not a consolidating market. This is, okay? A straight line, and you have an absolute trending move there. The squeeze often will mimic the trending move, but we like to use the squeeze, especially after a news event. When the squeeze changes color, we like to go the opposite way. So in other words, you're going down, 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 squeeze changes color, I want to go up. That's my heads up for reversal. However, we like it on a 30-second chart, not a 1-minute chart. And then the one change we like to make is the momentum length. Remember, I said what's important on the squeeze? The momentum length, we make it 17 on a 30-second chart, okay? And sometimes after an event takes place, you'll get a very nice signal. For instance, if you look at this particular signal right here, see how it changes color from dark to light, and the price started moving up and the bars got shrunk, they started shrinking. You had a quick reversal here and it was represented in the squeeze, okay? So that's how I like to set my charts up. And believe it or not, this is my real trading chart. That's all I've got on my charts right now, other than the VWAP. And I'm not going to get into the VWAP today, okay? Because you have to have certain things to be able to take advantage of that. I'm not going to, we haven't been using it that much. I'm just not going to really get into it today. The only other thing that you might want to consider are a couple of moving averages. Moving averages are also free, and when moving averages change direction, they can really be helpful at helping you to either stay in a trade, not take a trade. They can give you confirmation that you're going the right way. So there are a couple of moving averages that are really useful. To put a moving average on the chart, almost every platform does it the same way. You choose their indicators, you scroll down, and they have something called a simple moving average or an exponential moving average. EMA is exponential, okay? And then it has a time period. So if I put a 21 time period, that's a very popular time frame for a moving average. I like to make the 21 black. And then if you apply it and okay it, you can see the moving average. You can click on it, right? Make the line a little bit thicker if you want to. There's ways with every platform, it'll give you the width of a line, things like that, ways to make things easier to see how it's easier. And then I might add a 13. I might like to have a 13 and a 21 moving average on my chart. And then I'll show you one other thing. Let me put it on real quick because it can be helpful. I love when the 13 is green. So I'll make it green, make it a light green. I'll make it nice and wide, okay? And you'll see the moving averages if you spread it apart. That's a lousy color green, right? So if you do that and you make a lousy color green, just go back in, right click, go to properties and change it. Just change the color. A darker green is going to be easier to see, depending on what color your charts are. Everybody sets their charts up with different colors, but that's a little bit easier to see. So moving averages, what they do is they might cross over when the price is starting to go down. to the downside. They might cross over to the upside when the price starts going up to the upside. So they can help you to stay in a trade longer, okay? Or they might help you in deciding when you take your signals. There's all sorts of different ways that you might use a moving average, okay? So I have promised I would show you a lot of things. We've covered trade triggers, moving averages, setting up your charts exactly like the way I set my charts up, how to read the report for free. What else did we want to show you? Anybody have any questions? Will there be a recording? Yes, Michael, there will be a recording of this. Ask me some questions, folks, also, because like I said, we're not, okay, so let's say, how do you trade? How would you try to trade an event trade if you knew an event was coming up? Let's see if I can get this to work, okay, fair enough? I did a download before I got here of today's data. So I'm going to turn off my live connection and I'm going to connect my playback connection, okay? And let's look at gold from today, all right? And we had a trade today at 10 o'clock, all right? So today is the 11th, 12/11, start 12/11 and 12/11, and I'm going to go to 10 o'clock, right before 10 o'clock, okay? Let's go to 9:59 and 40 seconds, fair enough? So NinjaTrader they just fixed NinjaTrader 8, and it now goes immediately to gold at 9:59 and 54 seconds. So there's a trade, there's an event coming up at 10 o'clock. So let's say that you had, you know there's an event coming up and you wanted to try and trade it. The way that we trade events and the way that you can practice trading events, first, most important, we have a free clock. It's not ours. We found one of our members found it on the web, and it's called Topmost Clock. If you don't want to download it yourself because you're worried about viruses, if you send me an email at help@10minutetrades.com, help@10minutetrades.com, I'll send you the clock for free, okay? It's a great clock just for trading anyway. They have a whole bunch of different settings, but let's say we're not going to use this clock now, okay, because it's past 10 o'clock. We're going to use the replay clock, which is 9:59:40. We know there's going to be an event. We know that that event is going to possibly, it's not 100% that it's going to move the market big time because it's not a gigantic event. It's what I would call a mid-level event. But I thought, here's what I was thinking this morning. I thought, you know, the vaccine news came out right after the last one of these events took place. This is called the University of Michigan Consumer Report. It's an inflation report, and it's also a consumer confidence report. And it came out this morning. And the last one came out right before all the good vaccine news came out. And then today's report, I thought might represent consumers being excited and happy that vaccines were coming out for the coronavirus. And that's kind of what happened, although other issues made it not as big of a moving trade as I thought it might be. But let me show you the calendar like we use it. Okay, so we put the calendar on our trading chart. I'm going to close the clock But if you're interested in that clock, you just let me know, okay? It's a wonderful tool. So we've got this calendar so that I know that there's going to be this report coming out, the University of Michigan. So you're a trader, it's 6 seconds, it's 20 seconds before that report. Maybe what you do is you put an order above the current price, far away from the current price, and you put an order to sell below, far away below the current price, right? Okay, far away so that you don't get touched by the current price. This is called a bracket trade, okay? And we trade many, many trades by creating a bracket. And then the idea, here's the idea. The idea is as the market's moving, you try to get that bracket as close to the current price as possible without getting sucked into the trade before the news comes out. This means you better practice this in a simulation mode, okay? So if I turn the replay on, it's going to act like the market is at 9:59 this morning and 40 seconds. And bear with me because NinjaTrader has a bug that we're working on getting fixed. I just have to put the time in one more time. This is something that they know about and we're working on it. So bear with me, it's okay. Only takes a second. So I'm going to put in 9:59:45, okay? 15 seconds before the report. Gold's going to be, there it is. That's what gold looked like. I'm going to redo that buy order. I'm putting a buy stop above the market. I'm putting a sell stop below the market. I've got 15 seconds. The market is now replaying, okay? I manipulate my orders. I don't want to get filled, and as I'm practicing, I don't know what the news is going to do. It's going short. I see that the news is really good on gold, okay? So I want it to fill me on the short side. It does. Now watch what happens. I want to get rid of my buy order. And I'm just hanging out. You would also, if you're smart, you would create a stop for yourself so that if it goes $150 against you, it takes you out of the trade. Okay, you want to protect yourself. Now, I know what happens this morning, so I'm cheating a little bit. I knew the market was going to burst down, and it was going to do that. Okay, I closed the trade, and I could have made money. Okay, that's called bracket trading, and that's what we do. And so let me show you what happened in the real trade, because it's kind of interesting. So in the real trade, and I traded it this morning, University of Michigan, for exactly the reasons that I said. I thought that there might be a possible good news. Now, gold, when gold comes out on good news, when gold moves on good news, it usually goes down. It's like bonds. Bonds usually go down on good news. It's just something we know, okay? It's something we know. Goes down on good news. The ES, the S&P, the YM, the Russell, they usually go up on good news, okay? So these are things you just learn as you are a trader. So I'm waiting for that 10 o'clock report to come out. I'm kind of expecting the news to be good because the vaccine news came out before this last report. It's going to be in the report. In other words, it's part of the report, the results. When this report is released, it's taking into account that people are thinking, hey, vaccines are coming out, so I think consumer confidence is going to be good. Here we go to like 3 seconds before the report. Our orders show up on the chart. I get filled to the short side, and I move my stop to protect my profit, and it pulls me out of the trade because sometimes gold will reverse before it starts going down, sort of like what John was saying, okay? And in that particular case, I made 6 ticks I made $60 because I was up $10 before the trade. I did not make 100. In the real live trade, I made 60. And folks, there's nothing wrong with having a small trade. Small trades add up, just like the big trades add up. There's absolutely nothing wrong with having 10 small trades and 5 big ones, okay? No, the way that it works, John, I don't enter unless I get pulled into the trade. What you're saying is that I thought you entered with the strategy getting in right away in the direction of the initial move. That's not what we do. We are putting a bracket on before the event comes out, and then the event result will pull us into the trade, okay? To give you another example, because that's what we promised we would show you here today too. We wanted to show you the winning trades from this week, and then I'm trying to debate if I want to teach a lesson about truth. How honest do you want me to be? So we had another trade, John, that shows perfectly the idea of what we do. So we trade a grain report every single month. It's one of our favorite reports. It's called the WASD report. And right now, soybeans are just working great. So what happens is a bracket gets put on a couple of seconds before we know the time of the report to be released. We also know that this report moves the corn market, the soybean market at a minimum. Those are the two that we trade. Yes, Barry, it is a one cancels the other order, an OCO order, it's called. One cancels the other. So this is a real live trade, folks, okay? The market, the order, the news came out. Now, here's the amazing thing about this trade. This trade, you notice there's no calendar. There's a couple of trades that we have where I call it trading blind. We don't know what the result of the event is because the event is not on any calendar, okay? It's just not there. You could go to the U.S. Department of Agriculture's website, and by the time you figured out what the results of the report were, the trade would be over. So we have enough confidence, though, because we've traded this particular report for so many years, I have enough confidence to trade it. I'll put my orders on the chart. It doesn't mean every time I'm going to trade it, I'm going to make money, because I'm not. But this trade was awesome this week. Look how far it exploded, way further than I thought it would. And I made money on this trade. You can't see it, but it's hard to see. I made $237.50 on that trade. That fast, in 9 seconds. Interestingly, a couple of our members lost money on this trade, because if you look really carefully at the price, watch the price. It does something. It goes down and it reverses really fast. So what happened to a couple of people, because of the way I was taught to trade, I started moving my stop when I was in profit, okay? Because I'm a lunatic and I can't stand trading and being in the market. I can't stand being in the market. I want to get out of a trade as fast as possible with a profit. Sometimes that costs me a little bit extra money. Probably more than I should learn more patience. If I was going to say that, hey, everybody, if you look at yourself in the mirror, what's the one biggest trading thing that you need to work on your trading? For me, it's patience. Yes, John, we have targets. Absolutely. I had targets of 7 and I think 17 ticks on this particular trade. So what happened to some of our members, though, is it went so fast. Look at the way it reversed. It goes down very far, and then it goes all the way back up. All the way back up. If you did not move your stop, that's the stop right there. It went through it and stopped them out. So it hit their first target of 7 ticks, and then it went back up and took them out of the trade, the stop size was 12 ticks on that trade. So they made 7 on the way down if they traded the way I traded it. Not everybody does that, and I don't recommend people follow me verbatim. I recommend that you learn how to do this and make it your own. And I'll mention that in a second. But it reversed so fast that a couple of people couldn't get out in time because they weren't trading the way I was trading. They were just sitting and letting their stop work. And that's okay. Many trades would not have reversed, and it would have kept going down, and they would have made more money than me. Okay, my trade worked better that particular day because before it had the chance to reverse and take me out, I was moving my stop into profit. And you can see it. Let me let the trade play out. And this all has to go with trading styles. Here I grab my stop now, move it down, down, then I'm taken out as it reverses, but I'm in a profit area. I'm not above my entry. I'm below it in profit. This goes to trading styles, okay? There are multiple different trading styles that we are dealing with, okay? Everybody trades differently, but there also are reports that reverse more commonly than others. This particular report, the WASD report, I happen to know it reverses more often than others and quicker. So I tend to take my profit quicker, okay? And that particular day, it worked better. Let me show you a Tuesday trade where that worked against me, because it doesn't always work in your favor. So we trade a report that is a sort of a secret report. And this is probably the best thing that I can tell you in this whole lesson. It's called the API report. I don't even like to talk about it anymore. I was going to give a webinar on this report, and I thought to myself, you know what? I don't want people to know about this report. It's too good. And I'm not lying. It has not been stopped out the way that we trade it. It's had 3 or 4 bad reports, and it's a weekly report. Think about this now, 3 or 4 since January. Since January. Now, there's some dull reports. When I say dull, meaning that it might have only moved a couple of ticks, and it just didn't do that much. You know, it didn't make $10, or it only made about $10 or $20. Those are called dull reports. And sometimes you have dull reports. I hope I can find this week's report. Bear with me. But I wanted to show you the opposite of what happened to me. And thank goodness I have it right here. So the last trade I showed you, somebody did not move their stop. And because they did not move their stop, they lost money, okay? Because they did not move their stop, they lost money. Now, the opposite happens in this trade. Because I moved my stop to protect myself from losing money, I didn't make any money. So here's what happened. The trade, the news came out, and it moved the market down. You can see it. It's moving down. My entry is this bar here. Okay, you can see that red and black bar. And the price goes past that bar. And it goes about 8 or 9 ticks, 10 ticks below that bar, which is about $100 profit. And when I saw that start to take place, I went and moved my stop 1 tick below my entry to protect myself from losing money on the trade. thinking it would continue moving down and hit my target, and I would make like $190. And that week, it decided to turn around, and it took me out of the trade right where I moved my stop. So the point being, trades behave differently. They don't always do the same thing. Okay, so you could see the person that left their stop up top that particular day didn't have as good a trade as the person. What's interesting is this particular trade, you wanted to grab the profit and get out. Moving the stop to break even didn't protect you the way moving your stop to break even would have protected you in the grain trade. In that grain trade, you would have made your first target and it would have taken you out with no loss, okay? This trade, moving your stop to break even, took you out with no loss and no gain. It took you out flat, that's called. So moving a stop is just a very important thing to concentrate on how you trade. It's just a very important aspect of trading, okay? So listen, I've covered a lot of things. Do I have some questions? Do I have some questions? Anybody want to ask me any questions? I think that we've covered a lot. I could show you, let me end on two trades. Let me show you a trade that didn't work, because every educator always, actually, John, I know that trade so well, not risky at all. Very low risk, honest. That trade, not risky. Even that particular one, I don't agree, only because I know the trade really well. The way it's behaving now, moving into the move, seems like it might risk a reversal, but more often than not, right now, the way that trade is behaving, it tends to keep going in the same direction. But yeah, I mean, I understand what you're saying. Sometimes moving into a move can risk a reversal, but sometimes it's the opposite. But that's why what we're doing is we're studying the behavior of the event so that we can try and pay a really good attention to the event itself and the way that it repeats over and over. In other words, many of the triggers, the reports that we're trading, happen every month over and over and over again. Like the jobs report is every month, the oil report is every week, the API report is every week. So we're studying that event over and over and over, and events do have a life of their own where they generally behave consistently, or we will not trade it. We try not to trade the events that are not behaving consistently. And the way to make money trading news, in my opinion, the only way to make money is not to trade every event. And a lot of people can't deal with minimal amounts of trading. Number one of the best ways to make money trading is to trade as little as possible. And then number two, that means trading as little as possible, okay? Because you want to keep yourself out of the market, except when it's the optimum time to be in the market. And they love retail traders jumping into the market constantly to give the brokers and the smart traders money. So keep in mind that the more targeted you trade, no matter how you're trading, the better you'll do. I'm not saying that I necessarily agree that having a specific target for the day is the be all and end all, or even having a specific loss is not always the way to protect yourself. And the reason I say that is because of what happened to me yesterday. And I had a very difficult week this week. I mean, we have a lot of new people that came and joined up with us. And I don't know how to pronounce your name. I think it's Folk, Phuo. You know who I'm talking to. Am I pronouncing your name right? Is it Folk? But Folk is new, okay? And I know that he is here because he'd like to learn more about the way that we trade. I'm not picking on him. I just know he's new. And I want to leave everybody here with what I think is the most important lesson that you could ever learn as a trader. What the most important thing is, and it never fails to prove being true. It's not the system you're trading. Let's assume you find something that works pretty good, works pretty well. All right, it might be a system from an oil room. It might be a system from a gold room. It might be a futures and Q room. It might be a Forex room. You have a good system and you like the system. The only thing that ultimately is going to determine whether you are successful or not is your psychology, is how you handle the ability to take a loss, to set your trading goals. But it is the mental aspect of trading that unequivocally has the most influence on how you do, because it's almost impossible to join any service and follow any one person and do exactly what they say. Very often, by the time they've done what they're telling you to do, their trade is far gone. Very often, they're studied in the market they're trading better than you are, and they know the event better than you do. But if you can get your psychology under control, and if you can handle a losing trade, and more than one, and you can react properly when you have winning trades, and you can set your targets and not panic and not let a losing trade destroy your life, that psychological aspect of trading is the most important thing that is going to keep you as a successful trader. So I was saying I had a difficult week this week, and it was a little bit embarrassing because we had a ton of new people. And that's sort of what I was saying to folk. I think that, I'm not positive, but I think he might have come to some of the trade rooms. But if not, any of our new people that came to the trade rooms, I mean, honestly, they saw me make some mistakes this week. Now, for the way we trade, think about the way we trade. We're not sitting in the market waiting for a trade. I'm making an appointment every week. So I might have 13 sessions every week that I'm trading. And don't get me wrong, I'm not making excuses. You make mistakes because we're all human. It's just nobody is a robot. Nobody trades every trade perfectly. And you know, I make mistakes. And so the psychology of how I trade is no different just because I'm professional, quote unquote, a professional trader. I'm a professional trader, quote unquote, because I'm teaching people to trade. Okay, so they would maybe call me a professional trader, I guess, but I'm really not. I'm really just a regular trader, just like everybody in this room. Because when it comes down to it, I go into the room, I set up my trades, I trade it just like a regular person trades it, just like you do. And when I'm done, if I've lost the trade, I feel just as lousy as you do. What might be the difference between me and somebody that doesn't deal well with the psychology of trading is I take that loss and I move on without really losing any sleep over it. And look, I'm not going to lie and say that trades that stay with me all week, that I'll talk about it all week, but I have to get ready for the next trade. Yesterday, if you look at our schedule was pretty extensive for an average day. it had the potential of 5 events. Okay, let's look at them. I want to make sure I'm on the right day. So I'm on the right day. At 2 a.m., I didn't trade the British manufacturing report. Okay, but I did get up and I showed you the euro trade. Okay, that we did not trade live. That was the one that reversed. But then we did trade unemployment claims Thursday and core CPI live. We traded, there was a euro press conference trade. That was my first mistake. I didn't trade it live. I made a mistake. I was supposed to trade it live. I didn't. It made money, so I felt foolish. I traded the natural gas trade, and I traded it live, and it lost money. And then as I was teaching, by accident, no one knew it, but I knew it, and maybe an expert in the room knew it. As I was teaching why not to take a reversal on that natural gas news, I put a reversal on a chart that you couldn't see, and the trade went against me a monstrous amount. And just by my ability to be familiar with our signals, I was able to nurse it, a monstrous loss into a tiny loss. But I made a mistake. And then we had 2 awesome trades, the WASD report and the 30-year bond trade. And we finished the day with a nice, a reasonable profit, like about a little bit less than $200. I mean, it's not $1 million, but $200 a day is $1,000 a week, is $4,000 a month, is a lot of money. People forget that you can make $50 a day in the market. It's $250 a week. It's $1,000 a month. That pays a lot of people's mortgages. You don't have to get caught up in this. Oh my goodness, if I don't make $1,000 a day, I'm a failure. It's not that. It doesn't have to be that way. You don't have to make it so hard for yourself that you can't succeed. So psychologically is the most important thing. So I made a mistake. I started the day. The first trade we traded made no money. It was canceled. Okay. We have a cancellation rule. If the trade doesn't take place within a certain amount of time, we cancel it. And that keeps us safe. It's just a rule that we use. First trade didn't take place, so it was canceled. Second trade, like I said, I made a mistake and I didn't trade it. And yes, I was upset that I didn't trade it because it made an easy $100. And I was supposed to trade it. I just didn't. It's a particular reason where I just don't love that trade that much, and I didn't trade it because I don't love it. And then the natural gas trade came out, like I said, and I lost $200, like $220 on that trade. Now, so follow me here, because this is the most important thing I can ever explain to somebody. It's the most important thing you'll ever take with you. So I lost money on that trade. And then on top of it, I made a mistake and added to my loss. And if I would have let that mistake and loss affect my grain trade, I would have not traded the grain trade properly. I probably would have not traded the bond trade properly. And I would have very possibly wound up with a losing day. But because I have worked so hard on my psychology, I was able to just, okay, I made a terrible mistake. I recovered mostly from it. And by the time the grain report came up, I was totally relaxed, totally fine, and able to trade normally. In fact, I added one contract that I was debating whether I wanted to trade 2 or 3 contracts, not gigantic, but I added a contract. And then on the bond trade, I added a contract as well. And that was a very nice trade. And the point of this story is, if you for me, when I first started trading, the losing trades would absolutely kill me. They absolutely would kill me. I would actually, if I lost $20 or $30, sometimes it would ruin my whole day. It would ruin my whole day. I have learned, especially because of the job that I have, now. I come into the room constantly, in and out of the room, day after day. If I let one trade ruin my psychology, then I'm letting down all the people that counting on me to help them to trade the trade they're watching. They may not have even seen the natural gas trade. So what I'm saying is work on your psychology, work on learning enough about any trading that you're doing. A, to keep yourself safe. B, to keep yourself reliably comfortable so you have confidence in what you're doing. You must believe in yourself and you must believe in what you're doing. And that way, when you have a loser or two or three in a row, you will not fall apart, give up, quit, but you'll be able to pick yourself right back up and go back right into the game and keep going. Because, at least for us, because of the unique way in which we trade, if you let a loser stop you from trading the next trade, very often that next trade will be the biggest winner of the day or the week or the month. And that's also true in normal discretionary trading. If you're an oil trader and your first trade goes awry and you pass on your second trade, how many times you pass on the second trade because you're scared it'll go bad? How many times does that second trade work like a charm? So I can't stress more how important it is, no matter what you're doing, who you're doing it with, if you don't make whatever system you're trading your own and your psychology healthy, it's almost impossible to be a successful trader. So I want to leave you with that. If there's any questions, I will be happily stay until all the questions are done. We're having another webinar next week, next Tuesday. It's entitled, Does Automated Trading Really Work? The Risks, the Rewards, and the Real Truth. Copy down the registration. You know what? Trust me, we're going to email you a registration. It's the one thing I'm going to bug you with. And we're going to talk a little bit more specifically about our software, because we've just added automated trading to it, or a certain unusual type of automated trading to it. And we want to know the answer to this question as well. Okay. Does automated trading really work? The risks, the rewards, and the real truth. And we're having this webinar next Tuesday. What's the date next Tuesday? 12:30 p.m. Eastern time. Who knows the date next Tuesday? Because I'm such a great salesman. I'm not a big sales guy, folks. That's not what I give our webinars and I enjoy the teaching. But just remember that those emails that have my name on it, I'm not the sales guy. I'm the trade room guy. Next Tuesday at 12:30, we'd like to show you our software in a webinar, because we've added this interesting automated trading. How can you ABT without NinjaTrader and the automation? Okay, so that's what I was showing before, OA. I don't know when you got here, but when we send you the video of this, I show you in the video that you can put a bracket above and below the current price. Any platform that has either bracket trading or good dome trading. And what do I mean by a dome? A dome looks like this. This is what a dome looks like. Okay, right now I'm not connected to a live market, but let me connect. So if I connect to the market, a dome will fill in with price. It'll take a second. That's what a dome looks like. And I don't particularly care for the NinjaTrader dome, but like the TradeStation dome or Infinity Futures has a great dome. NinjaTrader has very nice chart trading. You can put orders above and below the current price, and then the idea is to move your pricing before the report comes out close to the price. and then when the report comes out, you get pulled into the trade. That's the basic concept, how you would do it without software. Okay, OA? That's how you create a bracket and the event takes place. And then OA, the other method of trading events, which is very popular, and it's why we use the squeeze. And this squeeze is free with Thinkorswim. It's all over the internet for Ninja Trader. The squeeze gives really good reversal signals on a 30-second chart, we have found. I like sometimes up to 10 minutes after news to use a 30-second chart. That was really something crazy happened there with gold. I'm not looking at news right now, but the squeeze can help you enter and exit trades after events when it changes color. First off, you want to see a trending behavior in the squeeze. Trending meaning, let's find a great trend. This is a nice trending move. It's all the same color, and what's ironic is that it's a consolidating market. It's unusual to have that type of a trend in a market that's not going up. It is a 30-second chart though, but you have a move moving up, and then you get a change in color. The change in color is your potential opposite direction entry. And if you look, and I just picked a random time. I'm not, doing this predetermined. I literally just pulled up the gold market and noticed this. If you had gotten in here short, right, at the worst spot, the bottom of the candle, 1846.40, it went as high as 90, 5 ticks above you, and then it went down to 45.90. So right now you'd be up, 40 or 50 bucks. Not a giant trade, but it was a signal to go short, and then it got confirmed by continuing to go down. It got even more confirmation by changing color completely and going to the bottom of the zero line and then going negative. So we try to use the squeeze for reversal trades, and that's another way that you could do appointment-based trading without our software, because there are many, many, many reversal opportunities after the event takes place. Okay. So one more time, folks, sign up if you would. We'd love to see you come to our webinar next Tuesday at 12:30. No charge. Okay. I probably know this, but if someone can't get the squeeze indicator, they can create it using a Bollinger Band and Keltner channel. Absolutely, Barry. Barry, your name is so familiar to me. Yes, the squeeze is an indicator that uses Bollinger Bands and Keltner channels in a specific kind of way. But if someone is dying for the squeeze, you can email us at help@10minutetrades, and I can tell you where to find squeezes. They're all over the internet. So I want to thank everybody. I hope that you feel that this was worth your energy and time. Like I said, it should be really clear what we mean by appointment-based trading, calendars, etc. Okay, Barry, that sounds good. You were a trading coach for many years. You can contact me, definitely, help@10minutetrades.com. But I hope you felt that this was worth your time, folks. I really appreciate you giving me your time. Dennis, it's nice to see you in the room. Let me just say hello to some of my former members and existing members. Bob, always nice to see you. Don, always nice to see you as well. I hope I'm not missing anybody. Most of the other folks I see here are new. Brian, Brian has been part of us as long as I've been a part of us. Brian is in Ireland, and Ron, I think you're a Ron that I know also, but I'm not positive. But thanks everybody for coming, and what can I say? Have an awesome and safe weekend. And Kate, thank you very much. Really appreciate it. You know how much I enjoy doing these things. So I'll see everybody, you know where, in the trade room. All right, folks, have a great weekend and a safe weekend. And thanks so much for joining me today. So long, everybody.